Hello there, everyone. Just getting here a few minutes late for our gigantic trading opportunity here. Canadian unemployment, very negative. Canadian unemployment rate is flat. U.S. dollar non-farm is very negative. Unemployment rate is pretty much flat. Okay, Canadian and U.S. dollar look like they should be negative. Hi there, Joseph. Hello, hello, Andrew, Michael, Linda, and Jerry. So the first thing we want to look at is that our trade from earlier today on the U.S. dollar yen. Hi there, Jerry and Kevin. Hello, Joaquin, Olalu, how's it going? Did you all see when we finally got up the courage to enter short on the U.S. dollar yen during the London session before the news? Hi there, Rui. So far that's turning out to be really good, and the reason was it was because it had formed this shape combined with this CCI signal. So that's a very handy thing to know, and just to be able to read the market also by seeing that that's 1, 2, 3, 4, 5, not by counting it, but by the shape of it. You can see that that is the shape of a trend, and that inside of here is the shape of a trend inside the fifth wave. And then there's the signal for the end of the trend. And so Joel had gotten in there right early, and then later we're looking at it and seeing that, okay, that's a trade. Hi there, Rui. Hi, Rob and Reed. So that was one. Okay, that's one pair, which is a short entry, and much better to have entered it before the news. And I assume it's going to continue to go down for the rest of the day. Now, what I had projected on the pound US dollar is that it's going to form the end of a trend, and that it's not going to be a good entry. So decided not to enter. I know it's forming the end of a trend, and the trend still looks like it's still going on all time frames. It's got all the signs, so I was expecting that this could be just a minor correction, or my expectation was that it's going to stop going down, not that it's going to turn and go up. And here are the things that you can see quickly is because of the 4-hour time frame. You get used to reading this on the 4-hour time frame, and this CCI on the 4-hour is really saying, if you believe what it's saying, it says this is going to keep going down after it corrects. That's what that really means. Yeah, it doesn't mean that it's not going to form the end of a trend, and you have to learn to recognize what this is telling you. Yes, it's going to form the end of a trend, and that most likely it's going to keep going down after that. Yeah, might be. Okay, here's the pound Swiss. We were looking for an end of a correction. It looks like it's forming. Does this fit in with anything that we know about in the news? Is this a probable entry? Because this was one of the things that we were looking for. I'm actually on the 15-minute and was looking for the end of this trend. I mean the end of this correction to a trend. And I can't quite tell for sure. Only thing I see is that it's got this bullish candle right there, and it looks like the end of a correction. So to further confirm that, one of the things that I will do is to jump over to the Euro Pound and look at it on the same time frame and see, is it going down? Well, no, it's not. So it certainly looks like a correction. I mean, that's definitely looking like a correction that should come to an end, but I don't see any bearish price action forming there. So it's not turning, at least not at this moment, but maybe there could be a delayed reaction here in this session. So it's something that we might continue to look for. Okay. Clue me in if you see something already, because if you see something that looks like it might be. Okay, here's the Euro Aussie, and I was saying earlier, did I send out the notes? I don't, oh my God. I'm just thinking about that. I gotta have a, okay, let's start recording. Multitasking is not my expertise here, but I need an assistant here. Trading is already such a big multitasking. So many pairs, so many different time frames, plus all the things you got to take into consideration. It's a lot of stuff to do. I could not. Well, I was not expecting the euro to go up because the prevailing sentiment is drastically down, and this news is not going to change that, or is probably not going to change it right away. And so here's the end of a trend, and I was expecting on this pair that this would probably not be. I was expecting earlier that there won't be any trades, or there may not be any trades during this session, because the downtrend still looks like it's on, and there will be a turn for the end of a trend. So I was thinking that this will form the end of a trend, but it will just be going sideways, and the going sideways will not be a good entry. When the euro interest rate has been dropped to next to nothing, and it's a shock to the entire world, and everybody is talking about it, it's all in the news about how terrible it is, U.S. dollar news is not going to make the euro go up. It might stop it from going down for a little while or something, but it probably won't make it go up. Here's a pound yen. It already continued down. This was a possible trade during the London session. It's already gone down. There's no trade there now. There's nothing you could do on the pound yen. Here's the pound kiwi. It also already made a short during the London session, which we saw, and we saw in advance, and I chose not to get in because it looked like the fifth wave, and it's already done, and we should know that when we see this pattern, we can't go short, and we don't want to go long. The next turn is if there's an end of a trend. If we're going to go short, there have to be another correction. and then you can go short at the end of a correction. You can't go short here. We all know that, right? We can't go short there, and maybe we don't want to go long. Yeah, if it goes up or sideways, and then after a period of time of a couple of trading days to go by, then it will be a great setup to go short once we have the the end of the correction. It might be a really great opportunity once it has gone sideways for a day or two and formed a correction. So what were you thinking, Yosef? I was overall thinking today that maybe today won't produce a lot of opportunities, but it looks like continuing the downtrend earlier today. This is what I was looking at earlier, and then I was thinking, okay, I don't want to go short because that's the fifth wave, but there it goes. That's the only trade, was to go short there. Just like back here, it's the downtrend, it's not over, and I usually just wait. Every time I get to this point, I'm passing on the trades because I'm considering that the trade, okay, yes, it's going to go down, but the risk to reward is not desirable, and so I just wait. And I think it's so important to be able to wait. But some people might also have gotten in there and consider that was a good trade. But generally, I'm selecting what trades I would consider to be desirable, and just yeah, I see it going down, and no, I don't want to enter. Yeah, it could be good. See, it could be good opportunities, and that was a fairly decent opportunity on some of these pairs, like the pound Aussie right here. But a good opportunity when this ends a trend and then does whatever it's going to do to make a complete correction to this trend. And we should easily be able to read, okay, this is a trend, this is close to the end of the trend. I don't want to sell at the bottom of the trend, but I do want to sell after it has made the correction, and it takes 50 to 100% of this amount of time. So that's a good clue that this is the realistic expectation. We're going out into the future, into the amount of time that could be 50 to 100% of the time of the downtrend. And so why would we think that we're going to be going short like right now, later this session? First, we got to get to the end of the trend, then we got to get to the end of the correction. So that's how you get in rhythm with the in the rhythm of profit. What happened? You're talking about the short on the US dollar yen. Yeah, we just finished looking at the US dollar yen, and what would you like to see on it? So we looked at this several times during the London session, and some people said they were already in it. And right at the beginning, in fact, right at the beginning of the session, I looked at it and said, there's no clear turn. But later during the session, I could see that, okay, it has made a turn. So here it is, whether I'm looking at the 2 hour or the 3 hour also. And what are we looking for? We just looked at it, but maybe if you didn't catch it, I will show again. Here's what we're looking at. We see this shape. Okay, so every time I say the one thing that you want to know that's going to make more money than anything else, no matter how much traders want it there to be something more complicated, the one thing would be to recognize that shape, and then when the CCI makes one cycle up and forms divergence and then forms compression and crosses right at the same point where it looks like there is a fifth wave. Oh, why do I not have that on there? Okay, okay, I'm going to put my new template on here so we can see what time frame does that show the entry on. Let me see. How do you read this, by the way? Because I see that it has a red arrow at the top of the wave 3, and then the MACD is forming divergence. I don't know what the red arrow is, and then the second red arrow is right at the same place. That's pretty nice. That must be nicely optimized. So I wonder, this is based on EMAs, but the signal is an SMA. 12, 26, and 9. What else is optimized about that? I've never seen that moving averages or MACD could show something like that. That's pretty cool. So this is and maybe this is the way to read this is, first of all, to be able to read the market, and second of all, if you know now, Yosef, before, when you're using this, you already knew not to go short here. Even I don't know why there's a red arrow there, but it is starting to form divergence. And here's where it has formed divergence. And I don't know, that's the 3 hour, but let's look at it on the 4 hour. So the 4 hour is a pretty good time frame also. And then let's try the 2 hour. The 2 hour seems to be a little bit too short. So this is pretty close to the same time frames where the CCI is showing it. It's right about the 3 hour and 4 hour, isn't it? Is that well, the red arrow is on there before it crosses. See right here, the red arrow is on here. It hasn't crossed, and it hasn't formed divergence. So why does it have? You were saying before something about maybe there has to be more than one arrow, but I don't know why there's a red arrow. And since this is divergence indicator, it hasn't formed the divergence yet. But why do they put this red arrow back here? Because I mean, you can tell that the second red arrow is the one you need to pay attention to. And here there's a buy signal right at the end of the correction. So that's pretty nice also. here's the end of the correction. That is the end of the correction right there. And there's a buy signal there. And in this case, the CCI also signals it. But sometimes the CCI doesn't signal some ends of corrections. Like right here, maybe it signals this, but it's on a different time frame if it does. Yeah, Yosef was saying don't mess with the settings. It's already optimized, except for the colors. Changing the color, the green color, to a brighter color if you have a dark background, but if you have a white background, you might leave it the same. Yeah, that makes sense. But that's just a regular MACD, and it's just the regular settings of 12, 9, whatever it was, 26 and something. I think it's been so long since I used MACD, and when I used it before, I was in Peter Bain's group every day watching him demonstrate it. I never could see that it was useful the way it was demonstrated before, but this looks like it's pretty clear. And anything that is additional confirmation. Now, if you know how to read what's happening with the price pattern, and then you know how to read CCI, and then you have this other divergence indicator, it could really give you a lot of confirmation. I don't know. We need to ask Yosef. I'm just guessing that when you see this arrow, there hasn't been any divergence, so I don't know why it puts that arrow on there. But if there's an arrow after divergence, then that you would pay attention to. And you can see right here, there's an arrow and it's crossing, and that's right at the end of the correction. So the same thing applies, is that first you look at what's on the chart, because based on what's on the chart, it's going to tell you what would I be looking for an entry. So if I see something that looks like this shape, I know that on this time frame I would be looking for something that looks like this. So first I would look up here and not looking at any indicators. I would look up here, and first I would determine on this time frame, this is what I would be looking for to enter a trade. And then I would look for, and then I would adjust the time frames up and down, and then I would look for something to signal the end of that correction. So if you just if you just put an indicator on a chart and try to start entering and exiting trades, any kind of indicator, like going short here because CCI compressed, bad idea. But you can see that's a wave 3. You don't want to go short there. So what you want to do is go long at the end of the correction. So reading the market based on the price pattern will be the first thing to focus on. And Yosef might have other tips on how to use it. It's today is the first time I've ever looked at this myself, so I'm just noticing right now how it's on this particular pair, on this particular time frame, it's helping to confirm what we could already see in this case. There may be cases where it's showing you something that you couldn't see, like what we were doing before with the stochastics fan, which is another thing that, you know, there's plenty of room for more research on this, but to how to determine these points. In this case, both of these worked really well, but in some cases the indicators are not working very well. This point right here, I'm sure that if you adjusted the time frame just a little, what about here? Would you know that that's not an entry? Would you know that this is not an entry? You know, it just takes a little bit of testing and a little bit of skill. Yeah, I mean, that's what I'm thinking right now. If I was looking at different time frames and looking up here, you know, I might be able to pinpoint this place right here. Okay, so that's the end of a trend. I'm actually not expecting this to be a giant turning point on the US dollar yen, because the other thing about the price pattern, which I see on all time frames, is that this is going to keep going up, and this is really just a small correction. Yeah, I'm sure that the more you look at it, the more it's going to make sense that it's not, just like with anything else, it's not just something you throw on there and start jumping in and out of trades every time you see an arrow. And I've noticed how important it is to adjust the frequency on this as well, because just like CCI, there's one time frame where it's too short and it's oscillating around, crossing and crossing, and it's not the right time frame, and then a little bit longer time frame and it's smoothed out, and you can see a legitimate entry versus noise. So does it make sense that this correction is not going to be over today? Anybody want to get out of it, you can, but it's got to go, you know, at least about this much. In fact, see, this is a wave of the trend, and it really should be bigger than that. This is the wave 2, and this would be the wave 4, so more approximately that size. It's not going to be over today, and you know, just to help you when you're trading, you see something like that, you go, okay, so that's going to be over in a few days, so I'll stop looking at it and I'll come back in a few days. Yeah, it hit the top of the previous wave. And if it's doing what it looks like it's doing, which is making a wave 5 on the weekly, that after hitting that and retracing, it will go through there. It will probably go through there. Well, I would usually not expect it to just go back up and say the short is over, but I would expect that it's going to correct about this much. And that a good place to look at it. Okay, here's the weekly time frame. So see, this is still likely to go through there ultimately, but in the meantime, 1, 2, 3. It looks like the 4-hour would be the shortest time frame that I would want to look at it on. And if I look at it, getting an alert there, so you can probably set this up to give crossing alerts on certain time frames. Oh yeah, even on a 30-minute, that's not finished. There's no divergence. It's just retracing. It will keep going down. So I will probably leave this running over the weekend because I think it's really just getting started. And now it looks like my Adobe's not working. I'm going to log out. So as far as reading the charts are concerned, based on what a trend does, we could see that this correction has to be bigger in time and price. It has to be bigger in time and price. And just think about what people were saying back here. They're saying, where they're saying, oh, it's going to keep going up. Oh, it's going to go down. Well, whatever they're saying is just going to correct, form an end of a correction, and signal a new trend. So this is going to make the proper size correction to this trend almost guaranteed that every time it's going to go to around 38% and then continue up, and also go the approximate amount of time that it would need to go, and that it pretty much can't stop there and just continue up after doing this. So then you go to the 1 hour, there's no end of a trend signal. You go to the 30-minute, no end of a trend signal yet. And you go to the 20-minute, there's no end of a trend signal, no divergence. And 15-minute, it's compressed going down. Now, did anybody see anything else that was a emergency thing for today? Let's start. Okay, here's the Aussie yen we were looking at earlier, and it looks like it is forming the end of a trend on the 2 hour. Let's take a look how this worked out. Yeah, I've noticed, a lot of people are thinking about things like that. The bulls and bears are fighting, the banks are doing this, but the one thing that seems to be the most accurate is to read the shape of the trend and the shape of the correction, because either you believe that it's going to form trends and corrections, or a lot of times it's you don't quite believe that it's going to do the thing that it normally does. But based on what they normally do, they form a trend and they form a correction, and then the correction is a certain percentage of the trend in the retracement levels, and for a certain projection of the trend in time. Yeah, this US dollar Canadian, is that what that is? Yeah, this is exactly what I think is going on up to right here where it's the B. Where it's at now I don't know. I assume that's the A. I mean, obviously that's the A, that's the B. Where it's at right now, don't know, but just assume if it's going to continue, it's going to continue like this. I can also see the possibility that this B could spread out more. So right about in this area, you know, I'm out of the U.S. dollar Canadian and waiting for it to get clear. This is the last clear entry where we went short for the C, and where it's going right now with all these long tailed candles, it's pushing back up, so it's not going down in a trend. So that's where I would just stop and wait. It's so important to be able to stop and wait, because every time, now you'll see this if you're doing this over and over and over, every time you get to the point where it's not clear, and then you say, how should I trade this? I think I should go long. I think I should go short. Whichever you do, you're going to give back money. But if you go, oh, what would be the next trade? Oh, that would be if I see the clear end of a correction. So, okay, let's just keep looking and see if we see the clear end of a correction. If we don't, I won't enter. And if it does something else, I'll wait and I'll watch it, see what it's doing, and then see if it shows me some other thing. So we want the market to show us what it's doing, and when it stops, gets to a point, looks weird, you stop. Then you have tremendous power over the market. Tremendous power. Because you could say, okay, go ahead, show me something. And it has to show you something. You can just force it, because if time goes by, it has to do it. It has to draw in the next piece of the picture. But many traders are constantly just thinking, how should I get in? So anyway, yeah, that looks about right, and this is the point where I would stop. We were talking about the Aussie yen somewhere in here. I see the shape of a trend. As soon as this wave 5 gets longer, the way it is, then I stop trying to determine the end of the trend. Because if I go to a shorter time frame, I can determine the end of that wave that starts right here. But I'm not going to bet that it's the end of the trend that starts right here. So I go to a shorter time frame, and I can look for the end of the trend of that wave. If I have the end of the trend for that wave, I would watch and see if it makes a correction and continues. Because if the wave 5 is long, chances are it could easily form a correction and continue into another wave of the trend. Only when I see this shape do I look for the end of the trend. The wave 5 has to be short. It can't go too much further than the wave 3. If it goes way past the wave 3, then it may not be the last wave. Here, the CCI compressed and crossed up during this wave 5, which is normal, but then if I go to a shorter time frame, the 2 hour is showing like an end of a trend. Am I stuck again? Oh, here we go. So here, what I'm looking at is this shape. And here I have the divergence compression of the CCI marking this point as an end of a trend. So then I would say this now has to at least form a correction to that trend. This is the size of a correction to that trend, to just that wave. This is the size, so it has to go approximately at least in this size and the time and price. It could go more sideways. And if that is the end of this trend, of course, you are watching it, and if it's the end of that trend, then it has to go to this size. And so as it starts forming, it starts to reveal to you which of those it's doing. It starts off, the only thing we know is that we got the end of that wave. You watch it, you discover whether you have the end of that entire trend or not. Now the euro pound is starting to form an end of a correction. Right there. That looks like the end of a correction. Looks like it. It looks like it. Right now I'm going to go with the pound Swiss, because I don't trade the euro pound. The euro pound already looked like this, but it's still kind of weak. But based on the euro pound, I would say that's probably the end of that correction. It sure does have everything that you would need to identify the end of a correction. Yeah, I'm sure we're going to have news. What news is that? You talking about the FOMC member or the Canadian? Well, we could look at Canadian pairs again, because that's the only thing that will be affected by that. So if you're in the short for that C on the US dollar Canadian, wait for the news and see if it continues. The Euro Canadian, the movement is based on the euro, so it looks like the other euro pairs. It kind of looks like it's going to keep going down the way the CCI is compressed, going down and coming up, spread apart, and it's going down and then going sideways. Yeah, I don't know that the Canadian news affects the pound Swiss, does it? As far as Canadian news is concerned, I think it only affects Canadian pairs. US dollar news can affect the pound Swiss because it affects the US dollar Swiss, and the pound Swiss can kind of follow along, and the pound yen can follow the US dollar yen. But I've just never noticed Canadian news affecting anything other than Canadian pairs. But then again, I haven't paid that much attention to that. But whenever there's Canadian news, I'm just focused on Canadian pairs. Oil news can affect the Canadian, right? Or does it affect the Swiss? I don't know how to interpret all that too, because the supply and demand of oil should be affected by people beheading each other in the Middle East, or war and things like that. You think, okay, the supply of oil is now going down, but I haven't seen that it's immediately affected that way. There are weird things that are going on in world politics and so forth that I never also understood, but I mean, the media is so controlled and planned. The stuff that they put into the news is like, it's like a big drama that they're showing people to accomplish an agenda, and it's so weird and hard to know what to believe. But okay, what I was saying about the wave 5 is that there is no rule for what will happen after a long wave 5. but it's likely, if the wave 5 is long, that it won't be the end of the trend. It could be. So what I said is, you take this wave, you go to a shorter time frame, and you look for the end of that trend, and then you watch what happens. Does that make sense? So I'm not saying that it will only go to 38% of this wave. I'm saying that you watch and see what happens after you go to a shorter time frame and look for the end of this trend. So it just means that you're taking the conservative route and saying, I don't know what will happen after this wave. Go to a shorter time frame, look for the end of this trend, and then watch what happens. If it forms something that looks like this, you know, as I was explaining earlier, you immediately know that's a wave 6. And the trend will continue. You will immediately know that as soon as it forms that. If it doesn't do that, but it forms this, a correction that's the proper size, then you will know that it has formed the correction of the proper size because you just watched it. And at no time would you need to know that before you see it. There's nothing there that you would ever need to know until after you see it. The only thing that you would need to know is to be right that there is a turning point for the end of this trend. The only thing that you have to focus on is being right and accurate about identifying the end of a trend on a shorter time frame. So that's the strategy. You know, it's like some people were saying, it's like playing chess. You can't plan every move of a chess game until you see your opponent's move. So you let them make their move, and then you respond with your next part of the strategy. Are you a chess champ, Daniel? Because I'm not. I feel like I don't have time to do something like that. And I feel like it'd be the most boring thing in the world. Looks like things are looking pretty clear on the euro yen. No, in some cases I would go long. Depending on what the end of the trend looked like. So if I have this right here, I am thinking that the end of this wave could be the end of that entire trend. So I go to a shorter time frame, and then I look at it, and here's that trend. If it looks clear that it's the end of a trend, and it has the characteristics of the type of a trend that you would enter in the opposite direction, then I would go long and see whether this forms a correction or whether it forms a correction to the entire trend. So in general, you want to avoid going long in a strong downtrend. But if you have a downtrend and it really looks like it's the last wave, then that's the time where I would be very eager to go long. Then if the last wave is very long, okay, I still want to go long, but now maybe not as much. So depending on how the end of this wave looks, the end of the trend for that wave, I may or may not go long. If it looks clear, I would go long and watch what happens. And if it forms just a correction to that trend, then I would get out at the end of the trend. So if it forms a correction to the big trend, then I would get out maybe at the end of the A. Just kind of a common sense strategy, right? It's not like a super rocket science thing, but it makes sense. So we all know what this pattern is, and we all know what's about to happen on the 1 hour, but what happens after this turning point? Lately, I've been thinking that all the euro pairs would do something like this after the end of the 1 hour downtrend. So we're looking for the end of the trend, and here's a case where I'm thinking that going long not so desirable. And about the only thing I can see on a chart that on this time frame would be the CCI is compressed going down and coming up spread apart. Based on the understanding that they just lowered the euro interest rate, then that's another reason to think that this is going to go mostly sideways. So we're just saying that about the euro also. So this is a place where I'm thinking that to go along here might not be very desirable. This is the first mistake that a lot of people who learn some of these methods fall into, is every time there's a trend and anything that looks like an end of a trend, they consider that an entry and then they get in. Then sometimes they win a lot, and then later they think they're still doing the same thing, then they lose a lot because they don't see the difference between the type of the end of a trend that you would want to enter versus the type of a trend that you would not want to enter. Wouldn't it be nice if trading was just like some simple rule? Always do this. But it's just like in life. If you wanted to go from Boston to Los Angeles, and somebody told you every time you see a turn, go right. Well, that wouldn't work as a rule. That's not how you would get there. Depends on where you are and what type of a route you'd want to take. Yeah, exactly. You just go around in circles. And that's what people try to do in trading. They say, every time there's a turn, go right. That's my strategy. I also have this filter. Go right unless the 8 stochastics is crossing 0 from below. It doesn't make any sense to try to make some kind of a rule like that. What you want to do is be aware of where you are and adapt to what is happening in the market. What else is going on today? We've already missed any opportunity except for this Canadian thing. We should just look at the Canadian stuff. See, this has gotten to be unclear to me on the US dollar Canadian. As soon as it gets unclear, I step aside. Here I have a correction. Then it looks like I have a correction to a correction. So generally a correction to a correction is not something that happens in the market. So if there's a correction to a correction, the end of a correction is shown by first the trend. Whenever I talk about the things that show the end of a correction, the first one is the trend. So this is not a trend, so we rule out this being the end of a correction. So whatever happens here, I'd stop. Now I'm just going to wait until it gets clear. Just recently, I hope you didn't just do that during this session, because this point where the red vertical line is the last entry. Now it's at a place where you would not want to go short. Oh, I need to check and see what happened with gold. This is what we would call selling at the bottom. Here's the last entry, the end of the correction. Here's the entry before that. Here's the entry before that. Entering down here is what we call scalping. There's no, and you know, person who likes to scalp would always say that. I already took out 30 pips, and 30 pips is great, but there's no signal for that unless it's on a time frame much shorter than the 1 hour. So perhaps here on the 10-minute, if it went sideways, drop, and that'd probably get you the 30 pips right in there. Well, that's okay if you've got the skill and the desire to do that. I would always just wait until there's a turning point on the 1 hour, but usually not on the 10-minute unless there's a strong trend and it's the end of a correction of the 1 hour trend. This also. Oh, okay, nice. Now once you get up into the 3 to 4 hour range, you can see that could be the end of the trend that we were looking at before. This is why multiple screens can come in handy. There's the shape of a trend. Here's the divergence, compression, pointing at this area as the end of a trend. This is the same thing. Oh, nice. Well, it just goes to show I should stop looking at whatever we're looking at and quickly go to wherever the trade is. And so that's the end of a trend, and it could be the same thing. It could be the end of a much bigger trend. So you enter at the turning point, and then you watch to see if it forms this size of a correction. If it forms this size of a correction, you know it's going to go down again. If it forms this size of a correction, then you know it's the end of a bigger trend. So let's see what happens with our, because see, that could be the end of the 12 hour. Oh man, there you go. That looks like the end of a trend on the 12 hour. So holy cow, that's not even too late to get in on the 12 hour. Okay, we're 3 minutes from the news. That's a good example, because that's just what we thought was going to happen. We had the end of this wave, which was a trend, I forgot the 1 or 2 hour, and then now we can see that's the end of the trend for this trend. Nice! We identified this point on the day that it happened. Now we're identifying this point, which is probably going to be the beginning of a big correction. It's going to last, how long? A month or two. Well, you could figure that out. Take the current price, measure to the stop loss, then take that and measure to the size of a correction, and then see how much bigger the target, the reward, potential retarget is from the risk. Now, which pair do we want to look at? Euro Canadian. Go into a short time frame, the 1 hour being short. Pound Canadian. Ooh, the Pound Canadian has an end of a trend right now. 1 minute before the news. It looks like an end of a trend going to the US dollar Canadian. If this goes up, I'm done with the US dollar Canadian until it gets to a point where it's doing something else. The news is out, and I'm just watching what this is currently doing. Looks like it's going to go down. So Euro Canadian. If it goes down, the Euro Canadian is going to be a short-term trade. And if the IBPMI is not going to be a big deal, that could also be possible. So it's fairly negative for the Canadian. So that means Euro Canadian should go up. So it should go up, but is it really taking off? So actually the Pound Canadian is the one that makes the most sense. The US dollar Canadian doesn't make much sense, and it's undecided. But the pound, it looks like it's undecided on all of them. It's because it is going up, but it's pulling back at the same time, and it's not really moving. But it looks like the Pound Canadian would be the one that would make the most sense of those three. Because this has the end of a trend. The position that the US dollar Canadian, this one also makes 2 or 3 times as much as many pips as the US dollar Canadian when it does move. That would make sense because the yen pairs are turning down, and so if if the Canadian yen is turning down, that would give it extra strength. Extra strength Canadian yen. That might be okay. Still looks like this will be a temporary correction on the way up. You do have a slight divergence here in compression, but the shape of the trend is not turning with a short last wave. So when that happens, sometimes there's no divergence, or the CCI is crossing 150. And then it goes up again, and that's where it starts to form the last piece of divergence. Yeah, you can see it's forming the end of a trend, and you can kind of see, looking at this time frame, that it's probably likely to make another wave on the 12 hours. So that's what it looks like to me. Is this wave right here? It's hard to see a wave 5 because the shape of it is more like a wave 3, and when it goes really strong up like that, and then CCI is crossing 150, right like this, I know that this doesn't make sense to people unless you have seen it many times. Like, this is kind of an intuitive thing, but when it's crossing the 150 level and the shape of this wave looks like that instead of like this, that it's likely that this will turn down, form divergence while going up again. What happened? I'll see you later there, Daniel, and anyway, usually don't trade the Canadian yen, but I sometimes find it very useful when analyzing the rest of the yen pairs. There is a turn on the Canadian Kiwi Canadian, but it's probably much better on the US dollar Canadian, maybe the Canadian yen. Let's measure the most recent move down, 323 pips on the Canadian Kiwi Canadian. Now I'm looking, Kiwi. Is this the same? Am I measuring the same thing? 564 pips. Let me just check. See, the beginning of this is 711. Going back to the Kiwi Canadian. Oh, no, I don't think I'm measuring the same thing. It's back here. So I may not be comparing apples to apples here, but 477 pips. Anyway, whatever. The Kiwi Canadian. Wow. What about the possibility that could be the end of an ABC on the weekly? Oh, if the Kiwi yen is going up, I was thinking this is a correction here and it's going to come to an end, it's going to go down. Well, other yen pairs planning to go down too, but that could mess this one up for a little while. So let me go back to the Kiwi dollar. This is the end of a downtrend on the Kiwi dollar. This Kiwi dollar has been so clear that I like to stick with this one because in the search for clarity, this is it. This has been it a lot lately. Is the Kiwi versus the dollar have been very nice and clear. Yep. Let's see what happened with gold since earlier today. Oh, it still looks the same, but it has fluctuated a little bit. It looks like it's going up, but it's pulling back as it's. This could be like another opportunity to get in, or if you already got in. Is it still good? Man, that looks good on a 3 to 4 hour, but still so uncertain. Yeah, it still looks good to stay in, but now it's looking a little uncertain, but not that much uncertain, because this is the thing to focus on, this shape. The end of the trend. This is still good, still okay. Anybody ever test out the theory that silver produces more money on the same trade? This is a lot clearer. I mean, you just got one smooth cycle of CCI, one long correction that's not an ABC, it's just actually looks like a trend. And you almost have a clear entry on the daily. You almost have it visible on the daily. So let's go down. if it's turning, we're just thinking that it's turning on gold, and it's going to be turning here also. Here around the 6 hour, now I see CCI compressed going down, coming up, spread apart. So that's an indication that it could keep going down. According to CCI, it's saying right now on this time frame, I'm saying that it could keep going down. Then I get down to the 4 hour and I see the divergence forming there. Get to the 3 hour and I see divergence and compression. It's just the same. It's just pulling back right now after, yeah, it looks like it's turning and pulling back. Here, now it's getting a little bit unclear that this is a sideways correction. So let's try it. Let's try entering gold and silver. Okay. You'd have to not be in one of the trades. Anybody ever test that? Enter a trade on both of those pairs and just see which one makes the more money. Or just pull up your demo account and put one, do it on there. Just see what the hell. Getting 2 trades. Looks good. I can see that it's picking up also. It went up, it's pulling back, and now it's going back up. And the way that this daily time frame is going to look later, or is the way this daily time, oh man. Based on silver, this is the buying opportunity, and I was thinking that it could be on gold also, because gold right here, has a slightly distorted ABC correction. Now a reference is this over here. It's a perfect uptrend, so that's a reference. Now seeing that gives us meaning. We can see a perfect uptrend, beautiful and perfect. So whatever is happening here is a correction to that uptrend, even if it looks like a trend. And what we have on gold also is a correction to the uptrend, but I can't tell for sure. That's the end of a C wave on gold right here. But I think it is, because this is what I was looking at earlier. Okay, our reference is this perfect uptrend over here. A, B, C, 1, 2, 3, 4, 1, 2, 3, 4, 5 of C. Yeah, well, I like this. Perfect trend. Correction, not quite so perfect, but I think this C section is working out pretty good. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 of 5. End of the C. What do you think? Should we put out an alert and say, buy gold, buy silver? Who else is saying it? I mean, in the trading world right now, other people see that? I wonder, because when it comes to gold, people are doing all kinds of things. They're always saying, oh, I just bought gold at this price. I just sold gold. And, you know, what's it based? I saw a guy the other night. I just bought gold. My target is 3 pips. And then some other guy was saying, show me your account. I don't believe you could do that. I was like, why do you want to see his account? Who could get 3 pips on gold? And why would you want to? Why would you want to spend your time doing that? I have no idea. $2 or 2 pips. Which one makes the most money on the same type of a trade? Here's what I would see if this is the end of a correction and it follows through, and then I would get out when it forms the end of a trend. And of course, I would never use a take profit in any situation. I would always look and see, is there a trend? Since I know how to tell the end of a trend, why would I get out? Unless it's not making a trend. If it's making a trend, I would look for the end of the trend. Might look for the end of this trend for the wave 1, just on a different time frame. Anyway, this has been a lot of fun this week. I think it's been a lot of fun, having a great time, and really enjoying this. And who knows what's going to happen next week going into, after this Euro interest rate thing. It's always going to be exciting to see the next episode. But anyway, I have been sitting in front of a computer all day long, and I can't sit here anymore. I've got to get up, do something else for a little while. Hope you guys have an excellent weekend, and let's see what we can do next week.